Welcome back, guys. It's Alon here, and I hope all of you have had a very happy New Year, happy holidays, Merry Christmas. It is the holiday season we've just passed. It's a new year, and I do apologize for missing the normal video we were supposed to do last week. I was actually on holidays, and I don't make these videos in advance because obviously I do just want to give you guys a quick screenshot of what's happening. Now, it is very exciting. We have closed our first year, so I'm very pleased. I didn't actually know, if we just go to stats quickly, I didn't actually know if we were going to make it last year. Remember, our goal is to get between 20 and 40% a year. I don't know if that'll be possible every year, but that is the goal. Perhaps some years will be more, some years will be less, but it's very important to protect our portfolio. So not to lose, it's very important, because losses are actually much harder to recover from. If you lose 50%, you got to double your money. You got to get 100% to just get back to where you were. So losses are very important to mitigate. There's no point, investing if you have 5 good years and then lose it all on the 6th year. It's kind of devastating. Now we have seen that January has started. We've retracted a little bit. The crypto craze has cooled off a little bit. But if you look, the last 2 months of our year last year has been very good. We'll go into that why in a moment. But essentially, I was worried about last year. We were on track in the middle of the year, but then we had these 2 bad months where, to be fair, the whole stock market sort of slumped back down. You see, we lost 10%, and that essentially eradicated our hard work. But we recovered, we did well, and we actually finished the year, to be fair, almost smack bang in the middle of our goal. Honestly, a few days before the end of the year, we were over 30%, which is pretty close to smack bang in the middle of my goal. So I'm very proud of the portfolio right now. I think during last year we chopped and changed it a bit. We will be refining it a little bit this year, but at the moment I'm actually very, very proud of my holdings. I feel very good about it. It will get better over time. The strategy will get refined, and it will obviously adapt to the current marketplace. It is a dynamic portfolio, and we are looking to grow it quite aggressively. Now, I'm finally reaching 5 copiers. I'm very, very proud of that. To be fair, guys, this is mostly my friends and family. To any of you watching, I really appreciate it. Thank you for supporting me. Now, let's have a look at our portfolio quickly. Now, these are our 20 holdings. We have 20 holdings at the moment. I do believe in diversification to an extent, but, there's only so many good options out there. I really like Coinbase and MicroStrategies, and if I was, buying a lot of other stuff, they might not have performed as well. So you really want to back your winners. Now, Coinbase and MicroStrategies, if you guys didn't know what that is, they're essentially crypto-related companies. And to be fair, it's quite interesting that at the moment outperforming the rest of the crypto industry. So the crypto companies, or some of them at least, are doing better than the actual cryptos. So it's showing me that some people maybe don't want to invest, maybe not in Coinbase's case, because Coinbase was a bit low in the past, but maybe some people don't want to, invest directly in crypto. Maybe they're scared, maybe they'd rather invest and get exposure through a company, which is a very interesting thought. Now, obviously our portfolio is in many different sections, so all of these, honestly, these top holdings, so we've got a crypto section of the portfolio, which is 20%, and this Coinbase and MicroStrategies is in another section of our portfolio called the Horns. And essentially these are our high risk parts of the portfolio, so they can get a lot of gains, as we can see here, and they can also get a lot of losses, but at the moment they're doing quite well. Surprisingly, a pocket pick, so we've got Arbor Reality Trust, which is really just a dividend part of our portfolio. So I'm pivoting a little bit. I do think at the moment dividend stocks are very, very safe because interest rates are high. Without going into too much detail, a lot of people are pivoting into bonds. Not TLT, this is long-term bonds, but short-term bonds. You can get like 5% on government bonds. So what it means is these companies that are paying 5-6% are not viewed as safe anymore. But what it means is, if interest rates do go down in the future, which, to be fair, they probably will at some point, unless they keep going up, but everything's already close to a breaking point, so it might not continue. So what it means is, when interest rates do go back down, these will become even more valuable, because now that 6% is all of a sudden good. If the interest rate is 3%, it's a better place to park your money, because it's also growing in share value. So that's very interesting. Now here we have some of our safer picks. We've got so TLT is long-term bonds. This is exactly the same play. So as interest rates come back down, or people perceive them to come back down, this will gain in value. So that has slumped a lot. But remember, this is only giving 2 or 3%. It's like 20-year bonds. So when interest rates do come down, that will become more valuable over time. And then here we have some of our core holdings. So actually at the bottom here, this is our chest. So this is our reliable stuff. So this is Tesla, Berkshire Hathaway. These are very big holdings percentage-wise. Now these are really just supposed to be really solid holds that we can close our eyes and, to be honest, hold for a few years. Not something we want to be sweating over, not something we want to be trading. And as you can see, guys, every single position in my portfolio is long. I'm not really a short seller. There has been times last year where I probably would have made good money shorting something. It's not necessarily something I prefer to do. There's extra fees, and the losses with a short position are theoretically infinite, where you can only lose what you can lose in a short position. If I invest $100 in a long position, you can only lose what you invest. But with a short position, it can really affect the rest of the portfolio. It's really dangerous. On top of that, there's fees just to open it. So I'm really looking out for you guys, and really not really looking to take much risk in that area. Now you guys will start to notice, for those of you that are copying, you'll start to get little dividend payments. I am going to increase sort of what portion of the portfolio will give you dividends. Now dividends are not going to come, so this is a dividend company, this is a dividend company, this pays dividends. There's parts of our portfolio, some of these companies pay dividends, so there is parts of our portfolio that will give you dividends. You'll notice that coming into your account. I believe on etoro it doesn't actually come in the stats, so it won't come up in your stats. You'll probably just randomly see small amounts of money coming in. So this was at 0%, but this is just a little bit of dividends coming in. Feel free to reinvest that, buy whatever you want, spend it on yourself. Now this is going to be a great year for us. I actually personally believe, and this is also my funds too, and this is my essentially practice. I want all of us to grow together and be able to manage our own financial future. And this is my practice in starting to manage a portfolio, of your own personal wealth. One day we'll all be very wealthy. We'll be managing our own assets. And it's very important to know how to react to the market, how to protect yourself, how to manage your own money. This is essentially financial literacy, financial education that nobody ever teaches you in life. But really, it's imperative to succeed. If there's one thing I learned in my degree, guys, it's not how much money you make with your job, and it's also what I'm learning in my current jobs, watching people's financial situations. It's not how much money you make, it's what you do with your money. You could genuinely be someone making $50,000 a year and be so much wealthier than someone making $200,000-$300,000 a year, just because you're able to put a bit of money aside, able to invest, able to stick to a consistent strategy, not to get overly emotional. There's all these different things that really, really indicate long-term success that income does not. Anyway, guys, if you're a follower, if you're considering following, if you're tuning in, to anyone watching this right now, I really appreciate you. Let me know if you have any feedback about the portfolio. The video quality is going to get better this year. I'm going to get more active on eToro, and I have plans for AcornProductions of where it's going to go, what it's going to be, and that will develop over the next few years. So for those early supporters, I will remember you. We'll have maybe something special for you in the future. And for all of you, I hope you have a wonderful year, and I'll catch you all next week.